Good morning, everybody. Happy Friday. We'll get started here in about 9 minutes, right at the top of the hour. Take a moment, look over the news, look over the pre-market tips, and get prepared. It's going to be an interesting day to see how things start shaping up. This is some historical times, so get prepared, and we'll start in about 9 minutes.
Just with the sunset, not so far. Give us just the light today, and the start. Listen to all the translations, stories across. You are. Sure. At a house, down a back road, we got the flag. On the 12th hole, if you got a dog, ain't wailing. Got a driveway that needs paving. We got a boat with a two-stroke, a couple guaranteed to make you laugh jokes. I got friends in low places. Yeah, life is what you make it. Statue. Got a girl named Sheila, she goes batshit. Tequila, got a job, it gets the job done. I got a loan at the bank, it's a big loan. The other place, you might see my names on the wall. Working time call, the legend of in past me and stop. Statue. We got I go down. Too long, it's all I go down to it's all. Go down. Walk and talk, I go down. Walk and talk, I go down. Go down to the funk, it's all. Stop. but so got you bought it. We can invade a line, goes the patience, but
Good morning, everybody. Take a moment to look over our notes as far as what we're prepping for. What we got listed in the news. We got 4 Fed speakers coming out, so it'll be interesting session start. So we'll get started here in about 3 minutes.
At the Bama Breeze, you can shoot some food.
All right, let's get this boat rolling. Good morning, everybody. Welcome to our live stream, live trading room today. I'd like to welcome everybody. Got a lot of new folks coming in here from our YouTube subscriptions. Make sure you like and subscribe. And let's get rolling here. Big sell-off yesterday. Of course, that's old news for a lot of you that already been prepping for the markets this morning. Some reminders. There was a lot of cracks in the system that were showing that this was coming. If you go back and look at our daily overviews, one of the things that we have kept mentioning over and over and over again for about the last 3 to 4 months is noticeable light volume as indexes moved up the last 3 or 4 months has gone ignored. And that's typical when we start to get up to all-time highs, big banks and institutions selling into the move. Okay, we also noticed that the repo and reverse repo markets, the liquidity and the money for overnight lending was getting smaller and smaller, very noticeably. Okay, we posted a lot of these comments and things on our Discord room, and we just want to keep I mean, it's hard to tell everybody that the end is coming when everybody's so happy. Okay, but there are things that we have to start being defensive for now. Many In this market right now, there are a lot of new traders that have not experienced these type of things before. We've, I've been around a little bit. We saw the 2000, 2003, 2008. I mean, a lot of these market corrections had very similar cracks, and this one was pretty extreme, and it's still not over yet. And to boot, we have things coming up. Trump has told us these things were coming and be prepared. We also to I think today is the ISO 2000, or sorry, 20,022 starts today as banks integrate and move over to a new system, which is going to cause a lot of volatility. All these things have been planned out. Okay. So be prepared that some folks did not know about this or these things or take heed, and they stayed leveraged through this, the use of margin. Okay, so these market cycles happen over and over again, and if you watch some of the indications of how much borrowing is going on in as far as margin rates, and they're pretty high. So a drop we saw yesterday in the market was a lack of liquidity. It wasn't that everybody was selling until we started getting towards the lows and people panicked out a little bit, or they were starting to get some margin calls at the end of the trading session. This morning, we expect some of those things to also take place where there might be some liquidity and price dropping for that. Um, I also want to make note that some of our market internals, we saw a little bit of buying coming in on the trend, the NYSE trend yesterday, trying to slow the market down from dropping. Okay, we see some extreme high readings on the VIX, but it's showing lower in the pre-market. Okay, so I think there's a lot of folks out there expecting a total rebound all the way back up. Well, we've been conditioned for that for quite some time. The trend, the NYSE trend, which is the short-term traders index developed by Richard Arms in 1973, I believe. Okay. It basically takes an equation and shows us if the trend is high and the markets are dropping. Okay. It's that what's happening behind the scenes that there's more upticks and up volume. So the buying will come in when the trend is above 2. And we want to keep a close eye on this as if the session sells off, okay, we want to see if the big players are stepping in. And this is a NYSE, so it's a composite measurement, not an individual index. If the trend is low, time to go. Trend high, time to buy. Trend low and the market's ascending is a lot of selling going into the market's moving up. Okay. And when you look behind and see what the math does, this is a very useful indicator, especially when the markets go to extremes. $ TRIN and $ trend with the letter Q behind it will be the NASDAQ composite. Now, this is a whole composite. It is not the individual indexes. Tick Q and the tick. This is a NASDAQ composite. Overall, upticks over downticks. And the composite for the NYSE, upticks over downticks. So yesterday's session, a lot of selling. Okay. These often can initiate and help us anticipate momentum in the market, if the momentum is going to continue to go lower or continue to go higher. Now, you can watch them on any time frame. Okay, I choose to watch them on the 5 minutes just to see if there's still momentum for short-term trading. We started off yesterday with a lot of advancing issues over declining issues, and then it totally reversed in one session. And that's pretty extreme. Okay. So just getting a lay of the land, a little understanding of what's going on in the overall marketplace here. The Japan carry trade is also starting to resurface. Okay. And we've known that Japan rates are increasing. They're starting to show inflation, where for, gosh, many, many years, Japan had low interest rates, making a carry trade. People would go borrow money from Japan and then uh, move it into treasuries and things like that. Okay. A complex trade, but that yen carry trade we've talked about for about 6, 8, well, almost 9, 10 months now, as we started to see that come into play. And these trades take a long time to unwind. We saw this the last big correction when the euro was the one that was unwinding the carry trade, and that was right before we saw a very sizable market correction. So a lot of things happening. It's not time to get overly bearish. There's going to be a lot of trading opportunities. Okay. Watch the media. They're going to be gaslighting you everywhere as things come up and get you kind of all freaked out. Okay. Just if you are using a lot of leverage, find a way to offset that and just go and have cash on hand. Okay. We have 4 Fed speakers coming out today, and a couple of them had just started. Susan Collins, Lori Logan, Michael Bohr, John Williams already come out. The Fed has been starting to show some mixed things going on, depending on which side of the aisle they're on, whether they're going to be bullish or bearish for the market. Just a lot of different things happening right now. Okay, a lot of distractions. Some of the other major distractions were, that things that you might be seeing on some of the social media platforms uh, that are really just saying, hey, look over here when they're doing something over here. Okay. Now, we read price, but we also have to be able to understand what's going on in the other conditions. Okay. So let's start jumping right in. Let's see, we got crude oil. Okay. Crude oil is kind of the footprint of what we might expect in the pre-market on the equity indexes. And we saw that there was a nice straight shot back up, and now we're starting to see the little consolidation and price pulling back. Okay. So I'm expecting some of that behavior. Yeah, we're already starting to see some of the moves on price. There may be a break to the upside. Now, over the last few, let's see, about the last month, we've been studying some things that market participants, like what Richard Wyckoff in the map that he was teaching. Watch for these areas of accumulation. If price shoots to the upside, it's often showing that big banks are selling into that move up. You want to watch for other signals. If the trend remains in consolidation, be prepared that they're just unloading at a little higher price. Okay. Some traders will take this as a bullish notion, but as we've observed more over and over again, when the first move out is to the upside, it can lead to more bearish conditions. Now, that doesn't negate the trade opportunity. A lot of traders like to take those breakout trades. Okay. Remember who you're participating with. Banks and institutions control these markets, and nothing is random here. All right, we're starting to see the 10-year and the 5-year uh, bonds and notes. Okay, they're starting to break to the upside out of a consolidation. This has been going on for since about the beginning of November. Okay. As we look at the equity indexes, I switched things around a little bit. We got the Nikkei here. Now, Nikkei is it's good to trade. It follows a lot of the indexes, but the tick size might be pretty extreme. So make sure you go out to the CME group, understand the contract specs around it. It does move in a bigger price increment. It's pretty consistent in how it trades, but you might get surprised the first time you try it if you don't look at the contract specs and understand the tick increments on Nikkei. Big drop yesterday. I think $1.9 trillion is what some of the numbers show as the markets move out. Let's see. I'm question is, will you take the breakout? Well, I'm still not sure yet. Okay, so I'm going to go through. We got about another 15 minutes to make some of those choices. It will be a little more elevated risk. We need to watch for some of the spreads. If you are taking the breakout trade, it may not last very long. Okay, I tend to wait for, especially doing a class or teaching in front of folks. I don't want you just to get you into a trade, then you stay too long, and kind of like this little breakout, price ran up real quick and then big drop. Okay. I don't know the level of skills that some of the traders have that are watching us on YouTube and out there. So I want to make sure that I'm taking some very high probability and low risk trade entries in order, if you're following along, that you're not going to get caught. Okay. I don't know everybody's risk parameters. I just know what mine are. And doing shows in front of or trading live in front of people is I have to be a little more less aggressive. Okay. All right. A couple other things. Copper approaching supply. Notice that we had the accumulation. Price went up, got the spring portion, and now we're starting to move lower. Looking for an opportunity, sell short somewhere in the range of the 5.0060, 4.9893 copper. Let's see, soybean meal has come down to an area. Soybean meal may be coming down bigger time frame, but we're going to expect a bounce off of this demand area. Corn also in the same region, and Canadian dollar. Okay, Canadian dollar on a bigger time frame, still looking for price to move a little lower, but we have hit some demand and bounced up to a fair value gap to continue lower to look for some more demand. Okay, let's see. Let's jump out to the equity indexes. And what we can see now in the pre-market is there are some stocks that are showing a nice gap up. Okay, actually, let's sort that. Okay, so we have basically when you're looking at the ticker tape on TV or something, you might see that, wow, there's a lot of bullish. The market's coming back, but look at the volume. Pre-market volume is extremely light. Goldman Sachs up $7.30 on 23,000 shares. That's very, very light. Now, what this means to us is that the volatility around the open is going to be pretty extreme. When you have light volume, price must shoot up to find sellers or shoot down to find buyers very aggressively. Thus, my comments earlier, will I be taking the breakout? Probably going to be a little hesitant to take the breakout. Okay. Breakout trading is a little more elevated risk. And let's just go back over here, line that back up. think that's in the right spot. Yeah. Hold on. Sometimes I need to lock those lines in place. Lock it. Okay. So coming out to a little larger time frame, we can notice that we have been making lower highs and lower lows. So intermediate 60-minute time frame, 20-minute time frame here does show that the downtrend is in play. Another thing to keep in mind, okay, and part of what we do here at the Market Institution is educate while we're waiting for the trade setups, okay? When you look at the overall picture here, we got a picture of the S&P, we got the prior session's high, prior session's low. One of the things we noticed is that price broke outside of that range, making it an outside day, okay? But we can also see that price is opening in the next 10 minutes or 13 minutes or so. The price is opening inside the prior session, okay? Now, what that leads to is a very high probability price is going to come back and fill that gap sometime today, okay? So we have a high probability of that gap filling. Now, when we look at the number of points it's gapping up or gapping down, that can also lead to a clue to when to expect that gap fill, okay? And being at 28 points gapping up on the S&P, okay, chances are we'll fill that gap in the first hour of trading session. So taking the breakout trade may be a little more elevated risk at this point, okay? A lot of things that we look at on the price chart, things we've documented over the several years to help us anticipate these things. On a daily chart on the S&P, price, I kind of played it off yesterday when we went up and hit a fair value gap on a daily chart and just got a huge sell-off. Now prices retraced and we bounced. This low point that we touched in the overnight session was an 88.6% retracement of the daily chart. We're going to look for price possibly to fill the gap, come down to that demand zone. This will be a place that I'll be looking for a trade opportunity, 65.15, 64.80 in that range. If that's too wide of a range just to enter at the proximal line and take a stop loss at the distal, then wait for price to come into that range and make a transition out of it, okay? And that's more or less what I'm waiting for right now is I want to see what's going on because people got their head spun around quite a bit yesterday. Light volume implies that we're going to have some more liquidity, we're going to have some more volatility. We also have PMI composite at 9:45, 15 minutes after the market opens, consumer sentiment, wholesale inventories. And so I'm expecting in the first half hour to 45 minutes of the session being open, some pretty good sized volatility. And if you're trading in that type of volatility, you can get whipsaw and also spreads are wider and you tend to take a lot more dollar risk. Even though the chart looks like, oh, it's a small zone, you might be taking some more dollar risk. Okay. All right. NASDAQ, basically the same scenario. Outside day, opening inside the prior sessions, we'll expect the gap fill. Okay. Let's see. I have a zone here, 23,880, 23,734. That'll be a place we expect to bounce. I don't expect a trend change yet. There's not enough evidence on the chart to show a trend change. And we're not seeing enough in the pre-market. Let's just bring this up. Yeah, as we come over here, pre-market trend is at 89, which is not at an extreme. So nobody's stepping in to save the market yet. Okay. Now, these are indicators. This is the NYSE trend and the pre-market reading. If in the pre-market the trend was above 2 or the trend was below 60, we would have some more evidence that the uh, opportunities for making trades or buyers or sellers are still coming into the market. When it's in the middle, it's just kind of that neutral area. The other thing that we look at here is the dollar has been consolidated, okay, and in a sell range, okay. But we're also noticing that the dollar versus the 10 and the 2-year yield prices are not correlated. This is another big red flag that, hey, it's time for us to wait a little bit because when they're not correlated, we expect a lot more volatility, okay? The VIX reading is also showing a little discrepancy as far as the the fear. People don't appear to be afraid of this. I mean, even though we're at extreme fear levels, the VIX is traded lower in the pre-market. Okay. So if you're getting the idea that there's some mixed signals, you're right. Okay. And when you get mixed signals like that, it's time to be observant and watch for the best entries. We will be making some trades, which is right at the open on the equity indexes. Um, with the Fed speakers and economic reports coming out, we've got to be a little more defensive. So a lot of things that we've lined up is part of our pre-market routine and things that we check and been checking for several years now. And we've gained some very high comfortability in utilizing this information to anticipate trade opportunities. All right, let's step out Russell. Russell's been consolidating during the Asian and part of the London session. After a big impulse move, we have a correction. Now, the correction moves tend to take a little bit longer. Since the Asian and London session have been consolidating, we got a little bit longer to wait for the London session as it overlaps the New York. But we're looking at that consolidation during that time period as a place to also be waiting. But we also anticipate that the New York session is going to be pretty good for a move, especially when the Asian London session is quiet. We often get some pretty big volatile moves in the New York session. When you start matching up the Asian London sessions and New York sessions, if they overlap and you have consolidation, especially if you have an Asian London, you'll expect a volatile New York. If you have London and New York session, it's really quiet and sideways, then you're going to expect a bigger move in the Asian market. Okay, Asian session, excuse me. Okay, and the Dow has potentially the bigger move. Okay, some traders may view this as a drop-based drop. I don't see the market conditions showing that this is going to be a drop base and rally at the moment. Okay. So prepare, be defensive. Crude oil, we talked about. We got a nice spike out of that area, and right now price is coming back down. This is what I expect kind of to see in the New York session as we start to open. Okay. Gold also in an accumulation. Price has been going sideways since about the 14th of November. So about the last 3, 4 sessions, 5 sessions. We're waiting for a move out of this range. The move to the downside, we'll look for the opportunity to be a buyer. The move to the upside, we'll look for the opportunity to be a seller. Right now, price is just really quiet. If these markets were falling apart, we would expect a lot more volatility on gold. Okay. So this is why public's only looking at part of the information. We need to be prepared to wait for the signals from the big banks and institutions. Another thing to point out is the exchange traded funds. Futures follow the cash market. The cash market would be the stocks. Okay. So the thing to point out here on the exchange traded funds is the dark pool transactions. Price are coming back down to those levels. And you can also see where the consolidation levels are. Qs are bouncing up just slightly this morning. A lot of folks wanting to go long, thinking, hey, we're going to get that move back up. I think we're going to hit a little bit lower first. I pointed out the different levels for the dark pool transactions because these are long-term support areas where some big transactions were taking place from the dark pools. Okay. Now the dark pool is just another fancy name for an exchange. Okay. So basically these are off-book transactions. They're not transactions that are taken in with small participants. Okay. IWM, I'm looking for that 222, 225 area. Qs, looking for price to bounce around that 582, 577. Okay, we're up a little bit on that. The dark pool transactions for the SPY, you might be asking about or thinking about, are pretty far away. Okay, we're also seeing that when price goes into that dead space, it tends to go past it before we have some buyers. And if you look at the diamond and the SPY, we're looking for prices to come down a little bit before moving back upward. Hey, Candlestick, let's see. You are not looking at a lot of information for a trade. Why not just look at the price and trade? Well, it's kind of like driving a car. Okay. What do I mean by that? Well, we drive a car dynamically. We drive a car as an individual, but we also drive a car as part of the crowd. Okay, you can only go as fast as what the traffic is going to allow. So what's the traffic conditions outside the price, outside the charts right at the moment? Okay. See, you can just trade by price, the chart, but if you're unaware of the traffic outside, you could be running right into a wall. Okay, so it's kind of a blend. We got to understand the traffic conditions and we got to understand the price. Okay, so good question, though. Great question. All right, let's step out here. We're about market's getting about ready to open. S&P. We're expecting the gap fill, so price to come back down. And I just need to make a couple adjustments on the trade. Now, I like the question. So if you have, if you want to learn more about this, just keep asking questions. I'm happy to explain these things. Okay. It's not everybody's way of trading. I get it. Okay. But I've learned over the years, it's not just what's happening on the chart. You've got to kind of look around and see what's going on outside. Okay. Now, the other thing that we have to also consider is that yesterday was a pretty strong impulse wave. Okay. And we know that impulse follows by correction. And then my data's slowing up here. I'm going to turn off the videos so we'll get into trading. Okay, so we're expecting a solid move on a breakout. But we have to have a way to manage that risk. Okay. And we have to get an idea where the institutional orders are at this point. So statistically speaking, we should look to fill the gap today. Okay. 5 p.m. close. in the open. So we have that on the table. That's a wrong comment. Okay. So we're looking for potentially the gap fill. And inside of that range, I'm just going to move this down. Okay, right there, we got a fair value gap. Now this fair value gap is in the accumulation area. Okay. If you're looking to choose to participate in the trade, your stop loss will need to be down near the lows. Give yourself enough wiggle room. Okay. So if we enter at 65, 63, our stop loss at 65.31, we got about 30-point risk. Okay. So 30 points at $5 a point. How many contracts can you trade based off your trading plan? Okay. So I'm going to bring up a calculator just so we can get an idea. If we're trading 1 micro, 30 points times $5 a point, I can trade 1 micro. Okay. So I'm willing to risk $150 entry, 65.63 stop loss. Okay. Down at the low of the session. Now, if I choose to take the breakout, I'll set both of them up here. Okay. The risk on the trade will be back down to this last low, not the low of the session. Okay. So my allocated risk per trade is about 300 bucks. Okay. And I'll use half of that position or half of that allocated risk per trade. So 96 to 76, we're risking 20 points. So I can trade 2 micros on the breakout. But then I have to have an idea where price is potentially moving back up to. Okay. So let's get the first entry set up. 65.63 quarter, 3/4. And let's see, I'm gonna stick with I'm gonna do 2 micro on that one. Now, whatever your trading plan is, you must have like an allocated risk for it. Okay. What's your allocated risk for the trade plan? 65.63 3/4. And then my stop loss 65.33. Now, if I take the entry at the breakout, we're looking at going long 65.96 half. $96 half, buy limit. And then once filled, I'll be placing my protective stop loss right about that 65.75 area. Okay. So we've got a couple of trades potentially set up. Now, what are we noticing on the 5-minute chart right now? What's this market doing? Are people a little spun around trying to figure out what to do? Okay. Why is it important for us to know that there are 4 Fed speakers? We got the PMI composite, the flash coming out, and we have consumer sentiment and wholesale inventories. And the wholesale inventories, I think they had marked will be delayed. Okay. So we're looking at 2 potential trade opportunities right here. Okay. But we needed to know what was going on outside the price chart. Okay. I've already had a couple of texts from buddies out there that I'm going long. I'm all in. Santa rally, Santa rally. Careful with that. Okay. All right. Let's take a look at the NASDAQ. Ooh, NASDAQ is getting a nice little consolidation right here. What we call is accumulation. And these accumulation areas are important because this is where banks and institutions are putting things together. A move down, we'll look for a long opportunity. A move up, we're going to look for more shorting. Look at the stocks are even not sure what they want to do at this moment. Stocks are moving very quietly, okay, slowly. A couple are looking bullish. Meta. That's about it. All right. Drop down to 5 minutes. Great questions today from the room. All right, so if we choose to participate in this breakout, right now we're risking, whoa, it looked like a small range. 66 to 77. We're risking about 90 points. Okay, 90 points at $2 a point. I could trade one micro based off of my trade plan. Okay. See, a lot of traders don't understand the risk they're taking on a trade when they just enter and then they place their stop. Okay. We do have a fair value gap area. And we are anticipating a gap fill based on information we collected outside the price chart. Okay. So if we take the fair value gap, you're risking almost 106 points. 106 points times $2 a point. You're risking $212 per micro contract. Okay. Time to expose that risk. Okay. All right. So one micro contract will look on as a breakout trade. 24,266. That's all I can do. My stop loss will go at 177. Looking for the gap fill and the opportunity to go long. 24,098. Wow, these are some big ranges. And stop loss will come into play at 958. Okay, so I'll put that on once filled. Anybody else kind of getting the feel that the markets don't know what they want to do? Big banks and institutions also stepping in right now, making this accumulation phase. A move to the downside would be more towards a bullish move. Okay. There's also on the social media a lot of gaslighting of what these markets are doing. All right. Chop, chop, chop. Let's get out to the larger time frame. Okay. Should we be stopped out of the two trades we have set up? Okay. Where do we have some zones on the larger time frame? Okay. Now I'm partially expecting that same spike move, we saw where the consolidation here was with crude oil. We got that big spike up. Okay, that's what I'm expecting on S&P and NASDAQ um, if we break to the upside. Okay. But then I'm also anticipating if we don't fill the gap early in the session, then we'll fill it a little bit later and we'll come back down to these levels. Okay. Wow, this market is really kind of spooked. Yeah, the Dow has, and as I'm looking at the exchange traded funds, trying to find where we would have opportunity, you can see that there's a breakout and there's quite a void lower. Also with the Russell, if it breaks to the downside, we don't have a lot of buying activity until it gets lower. Qs are still showing up about 0.5%. Okay. But they all look like they're pointing that they want to go lower. All right, so I'm gonna leave the breakout to the upside on, but I'm gonna remove my trade for buying at 65.63 in the S&P. I'm gonna look for a little more confirmation. Got it. Okay, so I'm still gonna do the long above that level. I'm gonna look for a little more confirmation before I jump in to take the turn. NASDAQ will pretty much do the same. All right, YM's coming back to fill the gap. And we can see that there's consolidation range. We do still have that unfilled gap. And this unfilled gap, I believe, was right around the time of the government shutdown. Okay. So it's like, no, it's too close to be then. But looks like the markets are retreating back down to the levels before the government shutdown. Yeah, a lot of the Fed language out there is showing that there's potentially no rate cut coming in December. There's going to be a pause. And depending on how the Bureau of Labor and Statistics, okay, we just got the flash or the PMI composite. Little mixed signal. NVIDIA continues lower as Apple moves higher, so it'll mix on that. I keep an eye on the Dow. I think the Dow is gonna give us kind of the heads up here. So we're looking at the accumulation that started from the New York session, Asian session, part of the London session. We're anticipating that the New York session today is going to be pretty volatile. Okay, some big price swings, but it's just not happening at this moment. Looks like we're waiting for some more news and some more Fed speakers to come out. Yeah. All right, so we're touching the first fair value gap. Now, I will have you note that in this accumulation area, okay, that a lot of times these zones or fair value gaps, they can be really tricky. Okay. But this also, my stop loss, if I get the breakout entry, has increased. So make sure that you know your risk on your trade before you participate. We're expecting price to fill the gap, which it normally does. With an outside day and opening inside the prior resistance range. Boy, it worked right off of those fair value gaps, didn't it? I'm still set to take the breakout. I just felt a little more uncomfortable taking the fair value gap entries. You can look at the large market cap stock. They've got kind of mixed across the board. They're not all bullish. They're not all bearish. It's like half are up and half are down. 1, 2, 3, 4 down and 4 up. That's a mixed market. These consolidated ranges for what I'm using them for are really telling us where the big banks and institutions are processing orders. So very good odds enhancer to get a view of the banks and institutional trading. Okay. Most traders, once they see the sideways choppy market, they just, kind of spit it out. I don't want to use that. No fun trading in there. And it isn't when they're doing their business. So we wait for clues, whether price breaks to the upside or to the downside to help us anticipate what type of trade we're looking at. Now you also see that I'm using tick charts, I'm using time-based charts to get the right picture for a trade opportunity. Okay. And kind of itching, got a low risk entry on the Dow. Well, this is awesome. This kind of feels spooky, doesn't it? Oh, everybody's chomping at the bit to get into a trade. Me as well. All right, I'm going to take a couple of micros on the Dow. Stop loss is going to be at 45,852. I think we're going to get a bounce back up.
Order filled.
Four micros, I got $150 risk. Now I keep exploiting the risk because it's really important as a trader to understand what you're risking on any trade. Okay. Because sometimes we get into trades, the charts can fool us and give us some false information. Oh, the zone looks really small. I feel good about that one. But then the dollar risk is way outside your trade plan. Then there'll be a place to add on once we create a new fair value gap down below. As price starts moving up, might be able to either take a fair value gap or even a breakout trade entry.
Order filled.
It's got hit on the S&P. $65, $63. Big, much bigger risk. Now that I see that opportunity, I realize that I'm outside of my trade plan. So once I do get the breakout, I have two micros at this point. I may look to, once we get that breakout area, if we continue on up, I'll look to reduce size to get back within that. It's a nice fair value gap entry though. Should have taken that one. But it's a little tricky taking them inside that range. Let's see, NASDAQ. Fake out. Yeah, NASDAQ's a little higher risk. I'm on a tick chart on the NASDAQ to get a better picture. The time-based charts right now are really kind of messy. And you'll notice that your trading behavior or your emotions will be more calm when you have the right picture. When you don't have the right picture, the emotions are much higher. So we're about 3 minutes away from the next economic report. Consumer sentiment. Now, this is consumer sentiment for last month and possibly the month before, depending on how they're dealing with the shutdown and how they're releasing the data. Okay. Consumer sentiment is not it's a survey that's been taken by the University of Michigan. They do a survey of about 500 households, asking them questions, and it's not a government per se number. Okay. Make sure your stops are in place for the economic report coming out. Things could get a little volatile. Now, remember, all these economic reports that are coming out, they refer to the prior month. So if you remember last month, were you feeling pretty good as a consumer, or were you feeling a little uncomfortable? You know, how did you feel? Okay. It's not what's happening right now. It's what's happened in the prior month. There we go. Not bad on a couple of micros. Let's see if we get the breakout. Now, it's also important to look up to the left and see that, hey, we had another area where price consolidated. Okay. Now, these areas can help us assess profit potential because price tends to go through these areas, which we call the dead space. So we got a little bit of bumpy road in between, but we do have some dead space areas around. So I'm going to target above the dead space. First, the target that we'll look for is about 46,633. Yeah, I'll just leave it at that. And that's the first fair value gap just above that consolidation area. We still have risk on the trade. And it's always okay to take a profit anytime you feel good about what you're doing. Wow. Taking trades inside that dead space is a more elevated risk, as you can see. All right, where do we have the opportunity to take a trade short? Or do we have one? Because we're still just looking for that gap fill.
Order filled.
Hey, NASDAQ got the gap fill. Russell still has somewhere to go. Then we got stopped out of our S&P. Not feeling overly bullish at the moment. Or bearish. So we're just kind of stuck in that range. Volume is increased. Remember Goldman Sachs was up. It's a $17. It was up $7. So it's about $18 turnaround. But look at the volume on Goldman Sachs. Only 500,000 shares traded on that. Caterpillar. This is very light volume. With the light volume, you have to expect more of that volatility. Okay. So hopefully you're getting a little bit of information about why we're looking at taking trades and how you can assess the markets for yourself to look at information outside the price chart that may directly impact your decision making. Okay. All right. NASDAQ on the tick chart has developed a fair value gap. And let's drop that down. Let's get over here. Now, a lot of folks use a time-based chart. And we got the gap fill, came into a fair value gap. And we're looking for that opportunity. So we're very selective about picking which index to participate in. And they must meet how you're going to apply a trade. They must meet your criteria based off of the trade plan. Now, recognizing the chart pattern is one thing. Another one is how you will apply the trade. You know, over the years, I've been awesome about calling the market, but the actual application of the trade and trade management, we all tend to struggle with. Okay. So there's a lot of people that call the market very, very accurately. But applying the trade can be a little more on the difficult side. All right, how are we doing on our Dow? Okay, once a new fair value gap presents itself on a 5-minute chart, that will give me a place to adjust my stop loss and potentially add on to the position if that's what I want to do. Right now, we're still in that trade range. Russell, chopping sideways still. Did utilize the fair value gap as an entry, but has not filled the gap yet. So it's like we're doing a lot of checks and balances. You know, while you're in the intersection, it's good to keep looking both ways to see if there's any change in the traffic conditions. Gold still pretty much doing what the indexes are doing. Let's step out in that gas.
Order filled.
So what are you guys looking to trade? I mean, what do you have your eyes on? I mean, this has price come into your supply zone or your demand zone? What have you done as a trade today? Let us know. Okay, soybean meal is in demand and so is Canadian dollar. But on both of these charts, I'm waiting for a little confirmation. Corn is also in demand. Okay. But in order to take a trade entry, I'm going to look for on a smaller time frame a place to engage in the trade where I can manage my risk. This is the area that we projected the price to change direction. And as we're watching price arrive, we want to see a little confirmation of the turn. Okay. All right. So what was one of the things that we talked about in the pre-market while I was going over things in the pre-market to help us indicate that the potential of bigger players were coming in? Remember? Yeah, we talked about the trend. Trend's right in the middle. So it's not a, for the NYSE composite, they're kind of neutral still. On the NASDAQ, we did see a buy program kick in. Okay, so there's more upticks over downticks on the NASDAQ composite. The New York composite is not made a buy program or made a sell program yet. It's still more on the neutral side. Okay. But we are seeing more advancing stocks than declining stocks. And again, these are NYSE composite, not the individual indexes. Oh, nice. Didn't take any trade. Good. So hopefully the information that I'm expressing, because after a volatile move like we saw yesterday, it's easy to get emotional about trying to do something. Been there, done it. I've done it many times. Okay. Looks like the Russell's looking pretty good. Russell's getting ready to break a strong resistance. S&P and the NASDAQ are looking fairly weak. I guess still wanting that gap fill. Now, after our live stream, live trading session that we do here, I will be moving over to our Discord room. We do have a voice channel on the Discord room, a place where you can share your screens. More or less, it's just community room trading. And sometimes trading by yourself can be pretty boring. Find yourself doing a lot of different things and then asking yourself at the end of the day, why did I do that? So if you like to hang out with some other traders, our community room is going to be open. I'll be in the voice channel, and that's located at the bottom of our list of rooms. Slow down is still hasn't given me any place to adjust my stop on a 5-minute chart. Russell does look like it could get a good pop to the upside. I'm just trying to find a place to enter. Remember, we're still expecting a gap fill. The trend, oh, great question. Okay. Now, if you're a subscriber on Trading View, okay, you'll see that there is a pre-market VIX and there's a pre-market trend. Okay, now TradeStation itself does post the transactions that are there. Okay, but it doesn't show on the price chart. Okay, so it shows you the price range. And it looks like TradeStation has disconnected. Let me bring up our other page here. There we go. I think we're back up. Are we back up on live stream too? Okay. It might have another shot at the NQ. Price approaching 24,058. We just hit the fair value gap. Stop loss would be still almost 100 points. S&P approaching at 65.50 area. Just make sure you know what your risk is on each trade and properly size that risk based off of your trading plan. Taking a look at the large market cap stocks on the for the NASDAQ, or basically the large market cap. Some of them are listed on the Dow. Not showing a lot of big price movement yet. Remember for the cat. Okay, put on your watch list corn, soy meal, and Canadian dollar, and possibly crude oil. Coming off of a larger time frame zone, I'll have to find a way to splice into it. And for those that understand what the fair value gap trade entry looks like, make sure that when you have these tails, that's telling you something's really not right. Make sure it's a very clean fair value gap area. The tails whipsawing around, they can give you some clues just to hold off a little longer. Wait for the right setup. I think S&P is going to be the next one to come down, fill the gap. Chop, chop, chop. Let's see, natural gas, we've already had contract rollover, and I believe Monday or Tuesday is contract last trade date on natural gas. Now, each month around contract rollover and last trade date on crude oil, natural gas, these products have shown some very consistent price drops as approaching the last trade date, and then either on last trade date or the day of, on last trade date or the day after, we do see price rise on many times. It's starting to get people are getting jumpy, but the S&P still hasn't come back down yet. Still in that trade range. And our boring little Dow trade is still hanging out there. But the fair value gaps tend to work. It's just the thing that is outside of that is that the potential of the gap fill. Very often it fills the same day when you open inside the prior day's trading range. Opening outside of the prior day's trading range, often the gap does not fill the same trading day. The internals that we mentioned earlier, we're starting to see that are getting stronger. We're seeing the trend is getting stronger. Now, when the trend starts moving up like this, if it gets above 1.5 and a 2, okay, that's a pretty strong signal that bigger players are stepping into the market, okay? You want to confirm that that bigger trader stepping in is going to be in a buy program or be in a sell program, okay? Where there's more upticks over downticks, okay? I don't think a lot of the market participants really understood how big of a price move happened yesterday because we rallied up first and then we went way south, okay? But it didn't look like a big number, but it was a pretty big swing in the overall market, okay? Remember, trading in this range is always much higher risk. A lot of the orders have already been filled. Nice fair value gap entry there. Not bad on a couple of micros. We could have added on. Nope, not yet. We just produced another fair value gap. Breakout trades can be elevated risk. They're just teasers. Not even an appetizer, just a teaser. All they did is push price up just to get all those day traders in and just swept them right out because even though the candles look kind of small and the ranges look small, it's a big dollar amount. Look at all the tails on a time-based chart. Very messy. And some traders like, what I've been doing some research on, that some traders like to use the point and figure charting. Cause it's doesn't have time on it. It just has the amount, whether it's been advancing or declining. It's actually, once you understand how to set up your point and figure charting, you can set it up to the amount of risk or an ATR or a percentage of what you want to see based off of your trade plan. And then you can see whether price is doing a box reversal and such. I know it looks a little complex, confusing, because you start looking for chart patterns and resistance, support. Okay, but it's a whole different chart. It's a different language. Whipsaw market here. You know, when I do the live stream, I really want to have some good successful trades, but sometimes the market's just not set up for it at that point during this time. Okay. There was some good scalping, places to get in, scalp a little bit. Okay. But look how price is dropping off of this area. That's just showing that there's a lack of liquidity. And we're still not getting any buy programs or sell programs. And actually the NASDAQ is back below the zero line here. And the VIX is starting to push higher. Traders will look to position for the weekend. Some of the things that are notable that we still need to be paying close attention, the ISO 222, okay, 20,022 starts today. Okay, as banks integrate into a new system. That may have a lot of bearing on why things are just as stable as they are at this point. So if you'd like to join us over in our Discord room, from the menu section, look down. I'll be hanging out today, just trading with everybody. Let me bring that up. I'm just going to show you where we're at. Okay. Oh, nice job, Abdallah. Beautiful. Whoa, look at that. That's a great trade. Nice job. Anyways, we share a lot in our community room. There's a lot of things, chart patterns and diagrams, things that we're talking about. But as you look at the TMI community room, right down at the bottom, there's the voice channel. And I'm connected. I'm in the background. So if you guys want to join us over there, please do. And team, can you post that link for our Discord room in the YouTube channel? Oh, you already did. I see it. Okay. Thanks for your time, everybody. Let's just see what we have left is our Dow trade. Okay. We're still waiting for a new fair value gap before we adjust our stop loss. Okay. So not a very active morning. Markets have been in the channel trying to decide what's going on. There's a lot of things going out there. But if you want to come and trade with us in our Discord room, you all are welcome. Have a great day, a great Friday, everybody. And thank you, team, for all your support.